Bull Bear Buzz podcast for decoding markets, fueling minds.
Ever get that feeling with company results? You see the headlines, maybe some big numbers, but you're kind of left wondering, okay, but what's really going on under the hood?
Yeah, exactly. What's the actual story behind those figures?
And that's what we're aiming for here. Today, we're digging deep into a company that's, well, pretty significant in India, Mahindra, or M&M. They're everywhere, from farms to highways.
Right. We've got their latest numbers, the official stuff, the quarterly results PDF, and the presentation they gave to analysts on May 5th, 2025.
So straight from the horse's mouth.
Absolutely. And our mission for you today, it's simple really. We want to pull out the key insights from these reports, how M&M performed last fiscal year, ending March 25, and what they're signaling about the future.
Basically give you the crucial info without you needing to sift through pages and pages of data.
You got it. Get you up to speed, properly informed.
Okay, so let's kick off with the big picture. Consolidated results, M&M Group as a whole, what stood out?
Well, the overall revenue growth is definitely a headline. For the full year, F25, they hit 1,059,211 crore. That's up 14% year on year.
14% growth on the top line.
Yeah, solid growth. And what's maybe even more interesting is the profit after tax, the PAT.
Yeah.
That grew even faster, 20% year on year, reaching 13,167 crore.
So growth wasn't just sales, it translated to the bottom line too, nicely.
Exactly. It suggests they're managing profitability well alongside that growth. And, their return on equity, ROE, was 18%.
Which is pretty healthy for shareholders, right?
It is, yeah. A good return on the capital invested.
So a strong year overall. Did that momentum kind of continue right to the end? How did the last quarter, Q4, look?
It did, and maybe even accelerated a bit in some ways. Q4 consolidated revenue was 42,599 crore. That's a 20% jump compared to Q4 the previous year.
20% in just the quarter. Wow.
Yeah, and the consolidated PAT for Q4 also grew by 20%, hitting 3,295 crore. So they definitely finished the year strong.
Okay, that's the whole group. But M&M has its core operations too, the standalone entity. How did those specific numbers look?
Also positive, though the percentages are slightly different, as you'd expect. For the full fiscal year, F25, standalone M&M revenue was up 17%, reaching 1,018,625 crore.
17%, big care.
And the standalone PAT mirrored that, also up 17% to 12,093 crore.
So still very solid growth on its own. And Q4 for standalone.
Also strong. Q4 standalone revenue jumped 24% year on year to 31,609 crore.
24%. Even faster than consolidated in Q4 then.
It seems so, yeah. And the standalone PAT for the quarter was up 22%, reaching 2,437 crore. So whichever way you slice it, consolidated or standalone, the financials paint a picture of, a healthy, growing business.
All right, makes sense. Let's get into the engine room now, the different business segments. Auto is huge for them. What were the highlights there?
Oh, absolutely. SUVs are clearly firing at all cylinders for them. Their SUV volumes were up 20% year on year. That's a big increase.
20% more SUVs sold. And market share.
That followed. They gained ground. Their SUV revenue market share went up by 2.1 percentage points to hit 22.5%. That's a significant slice of the market they've added.
Right.
And it wasn't just SUVs. Their light commercial vehicles, the LCVs under 3.5 tons, they saw even bigger market share gains, up 2.9 points to 51.9%. They really dominate that segment.
Over half the market for those LCVs. That's impressive. Did this translate to better profits in auto?
It did. Their auto PBIT margin, that's profit before interest and tax, improved. It went up to 9.5%, a gain of 1.1 percentage points.
So selling more and making slightly more profit on each sale.
That's the idea. Better efficiency or pricing power. Likely a mix.
Now, the big one everyone watches, EVs, electric vehicles. What did the report say about M&M's progress there?
They highlighted a strong order book for their battery electric vehicles, their BEVs.
Yeah.
And importantly, deliveries have actually started.
Okay, so they're getting them out the door.
Yes. And what caught my eye was the profitability. The total BEV business, which includes their EV subsidiary and the ESUV contract manufacturing it, achieved a positive EBITDA in Q4.
Really? Already?
Yeah, 1.0% EBITDA margin for the quarter. It's small, but getting into positive territory so early on, that's quite encouraging. Suggests they're managing the initial costs effectively.
That is a good sign. The presentation also showed off some new models for launches in F25.
They did, 6 of them. For the commercial side, there was the Bolero Max Pick Plus, new platform capacity at their Chakan plant, starting at 120,000 units a year. And longer term, they're planning a completely new greenfield plant, aiming for operations from F28 onwards.
So definitely investing heavily in future auto production.
No doubt about it, they're betting on continued growth.
Let's switch gears to the other major pillar, farm equipment, tractors and such. How did that side of the business fare?
Very well, actually. Tractor volumes grew by 12% year on year.
12%, still strong.
And just like in auto, they gained market share. It hit 43.3%. They made a point of saying that's their highest ever share, a gain of 1.7 percentage points.
Wow, nearly 45% of the tractor market. That's huge.
It really is. That market leadership is a massive strength.
And profitability in farm, did that hold up?
It improved significantly. The farm PBIT margin reached 18.4%. That's up 2.1 percentage points. Very strong margins there.
18.4% margin, that's impressive.
Yeah, and their broader farm machinery revenue grew 18% too, hitting over 1,000 crore. So the domestic farm business looks, really robust. They also talked about new products and expanding geographically within India.
Okay, domestic sounds great. But I remember the outline mentions some issues internationally.
Ah, yes. That's the flip side. While they're focused on international expansion, mentioning strategic value from MAME in Japan and Sampo,
Right.
they ran into significant macro headwinds. This led to some pretty big write-offs related to these investments in Q4.
Write-offs. How big are we talking?
Quite substantial. Standalone, it was a 654 crore hit at the PT level. Consolidated, it was a 156 crore impact on PT in Q4 alone.
Oof. That definitely puts a dent in the quarterly profit numbers.
It does. It's a short-term profitability hit for sure.
So what are they doing about these international problems?
Well, the immediate steps are focused on cost control, cash flow management over there. For May and the Sampo specifically, they mentioned scaling down operations to make them more sustainable.
Scaling down. Okay.
Yeah, and they said they're looking at further actions. The goal is to get those international subsidiaries back to profitability within, they hope, the next 12 to 18 months.
Okay, a turnaround plan is in place then. Let's move to their financial services arm, MMFSL. How did that look?
MMFSL showed decent growth. Their assets under management, or AUM, increased by 17%.
17% growth in the loan book, essentially.
Pretty much, yeah. And crucially, asset quality seems okay. Their gross stage 3 assets, basically, the riskier loans stayed below 4%.
That's good, keeping defaults low.
Exactly. And their PAT, the profit, was up a healthy 33% year on year. Interestingly, though, they did mention slowing down disbursements a bit.
Oh, why is that?
They said it's deliberate, to prioritize strengthening internal controls, so maybe focusing on quality over just quantity of growth for a bit.
Makes sense. What about the tech side, Tech Mahindra, another big piece of the group?
Tech Mahindra is working on its margins. They mentioned disciplined actions there, achieving an EBIT margin of 9.7%.
Okay, nearly 10%.
Yeah. And they reported strong deal wins and a good pipeline, especially in consumer goods and banking financial services sectors.
Any particular regions doing well for TechM?
They highlighted momentum in Europe and also the APJ region, Asia Pacific and Japan.
Got it. Now, M&M also talked about these scalable growth gems. What's that all about? It sounds a bit like marketing speak.
Maybe a bit. But the idea is they have this portfolio of smaller, diverse businesses they see as having huge potential. Things like logistics, hospitality, real estate,
Okay.
last mile mobility, think electric three-wheelers, trucks, and buses. Even niche things like aerospace parts and classic motorbikes.
Wow, quite a mix.
It is. And the ambition is big. They're targeting valuations of like $1 to $3 billion for each of these businesses eventually.
Each. Okay, that's ambitious. Any specifics on how they're doing?
They gave a few examples. Hospitality showed steady growth in rooms and revenue over the last 5 years. Real estate saw strong growth in residential presales. Logistics has a target of 10-12% market share by F31. And in last mile mobility, particularly electric three-wheelers, they're already the market leader with nearly 43% share. Their renewable energy arm, Sustain, also has big growth targets for its portfolio. So it's clearly a key part of their long-term diversification plan.
Diversification and finding the next big growth engines.
Got it. So if you had to sum up the main strategic messages M&M was trying to convey, what would they be?
I think the core theme was this bold by design idea, emphasizing ambition. They definitely hammered home the strong, consistent execution in the core auto and farm businesses.
Right, the mainstays.
Yeah, then highlighting that TechM and MMFSL are making measurable progress towards, reaching their full potential within the group. And of course, the momentum in those growth gems.
Okay.
So the strategy seems to be, Leverage the leadership in auto and farm, get Tech-M and MMFSL firing optimally, grow these new ventures, and, importantly, keep delivering on their commitments. They gave updates showing they met their FY25 goals for auto and farm. Consistency is key. Beyond the segments, what about the overall financial health? Things like debt levels, liquidity.
General looks quite healthy. If you exclude the financial services part, which naturally carries more debt, their debt-to-equity ratio is very low, like 0.07, shows that they're not overly reliant on borrowing.
Very little debt, then.
Relatively speaking, yes. Their ability to cover debt payments, the debt service coverage, and interest service coverage ratios look comfortable. The current ratio suggests good short-term liquidity, around 1.4.
Okay.
Inventory turnover seems efficiently managed. And the margins, operating and net profit, are positive across the board, standalone and consolidated. And importantly for you, the earnings per share, basic and diluted, were positive for Q4 and the full year. They're generating profit for shareholders.
Sounds like a solid financial foundation overall. And the final piece of news investors always look for, dividends.
Yes, they announced one. The board recommended a final dividend of 25.30 paise per share.
25 rupees, 30 paise per share.
Okay.
So let's try and bring it all together for you listening. What's the main takeaway here? M&M had a strong F25, right? Driven heavily by auto and farm.
Absolutely. Those core businesses performed very well, and there's clear progress in the financial services and tech arms, too. Plus, this big push into future growth areas with those gems and heavy EV investment.
But they also face some international headwinds, particularly in the farm sector, leading to those write-offs.
Correct. That's a key challenge they acknowledged and have plans to address. But overall, the picture is one of robust performance and clear strategic direction.
Hopefully this dive gives you, the listener, a much clearer, more nuanced view than just the headlines, a real feel for M&M's recent journey and where they might be heading.
Exactly. And maybe it leaves you with a thought to ponder. Given these results, their big ambitions, especially in EVs and new platforms, what does this all suggest about M&M's position? How well are they setting themselves up for the future in what's clearly a rapidly changing auto world, both in India and globally?
Definitely something to think about. Now, just before we wrap up, the standard but important disclaimer. The information provided is for educational purposes only and not financial advice. We are not SEBI-registered advisors. Investing in stocks carries risks, including potential loss. Consult a SEBI-registered advisor before deciding. We are not liable for any losses from decisions based on this information. For unbiased market updates, subscribe to Bull Bear Buzz.